Alright, another learning objective down, another one coming up, and this one happens to be following status and tax computation. So we finally get to dive a little bit more into the statuses. So, what makes them up, and how do we make our little computation? So, starting off first, single filing status. These are, of course, unmarried or legally separated as of December 31st. And they do not qualify as marrying filing separate, head of household, or a good old qualifying widow. Okay, so again, we'll get into what those are. So single is pretty easy. Now let's go marrying filing jointly. Now, if you happen to get married on December 31st, even if you didn't live together the entire year, because you got married by the end of the year, you can file marrying filing jointly. Usually, people will end up filing marrying filing jointly. That's the thing. Now, if somehow the spouse dies during the year, we always file as marrying filing jointly in the current year. After that, it goes to qualified widow or widower. Marrying filing separately. Each one has to file separate returns. They must compute taxes the same way. So, if one spouse itemizes, well, the other one has to. If one uses standard, the other has to. So both itemize or both use standard. There is no way around that. Can't have one do the other. And here's the community property state. You must follow state law. Fun thing about Texas. Again, we are a community property state. So even if you file marrying filing separate that whole year, you will dive right down the middle. According to our state laws, you must separate wages 50-50, everything else 50-50. So really you do not save anything with marrying filing separate unless you had stuff that was before the marriage, like stocks or something like that that you sold. And still, that's very rare. It is best just to go ahead and marry filing jointly, plus you get more added benefits. Now, again, there's reasons to file marrying filing separate. Again, divorce going on, stuff like that. But here in community property, it's still 50-50. Yeah, still 50-50. Now, head of household gets its own slide because it's completely more interesting. So HOH. Tax tables have lower rates for single or marrying filing separate statuses. That makes... why? Anyway. Unmarried or abandoned as of December 31st. Okay. Paid more than 50% of costs of keeping up home that was principal place of a resident of a dependent child or other qualified dependent relative. Again, you must provide 50% or more. There is one exception to principal residency requirement. That's if dependent is the taxpayer's parent. He or she does not need to live with the taxpayer. It's the only exception to the dependency rule of residence. Okay? But again, you have to have a dependent child or other qualified dependent relative. Then you can file for a head of household, get the little extra standard deduction. Sorry, kind of had a little brain not working there. But yeah, you have to be single or marrying filing separate status. Mostly, we do have that head of household. It is nice. It's lovely. It's a good credit. But you gotta have a dependent. That's qualified. Now, qualified widow or widower with dependent child. Okay. They may continue to benefit from the joint return rates for 2 years after the death of the spouse. The only way to qualify to use joint return rates is widow or widower must pay over half the cost of maintaining a household where a dependent child, stepchild, adopted child, or foster child lives. Notice that has to be a child, no other kind of dependent. So, when we look at these, basically, again, you'll file qualified widower after you file married and filing jointly in the year that your spouse has passed. So you get 2 more years of having a joint, but only if you have a child. That's where they get you. Alright. Tax computation for the 2020. We have 7 brackets. We used to have more. Don't worry, it happens. And these rates are going to be based on income level. We start at 10%. Basically, if you're going to get taxed at 10%, anything below that or you don't qualify, again, you have no tax. But you got 10%, we have a 12%, 22%, then jumps to 24, to 32, to 35, and then whopping 37%. And again, we're going through all the calculations actually of the tax tables and stuff as we move forward in later chapters. Sorry. Again, it is based on income level, so the more money you make, the more tax you're going to end up paying. It's a classic rule. Alright. Knowledge check number 2. So let's see how well you do. You know the rules. I'm going to go ahead and read it for y'all and then pause the video and see if you can answer the question. So first off, Ricardo is married and has no dependents. In June, his wife Katrina leaves him and essentially disappears, basically abandoning him. What should his filing status be? Should it be single? Should it be married filing a joint return? Should it be married filing a separate return? Head of household or qualified widower? You ready for this? Quick answer is going to be marrying filing separate return, even though he's abandoned. In this case, the taxpayer is still considered married until he's legally, they tell him that he's abandoned. Then we can figure out that he's probably single. But he cannot file as single. Again, he has married, just the wife disappeared. She's a missing person. Since the taxpayer does not have information about the spouse, he would file a separate return. It's one of those special ways of that a separate return would be qualified. And the same thing in a community property state. Okay? So, that concludes everything for filing status and the tax computation. Nice. So we're going to close up this video and y'all guys know what to do. If not, you make sure you let me know if you have any questions.